Good morning, and it's great to see so many of you here this morning. Distinguished shareholders, investors, partners and clients, members of the Sygnus, Sagicor and Scotia Investments teams, members of the media, ladies and gentlemen, both present and following these proceedings online, good morning. My name is David Cummings, and I am the Vice President and Head of Real Estate and Project Finance at the Sygnus Group. It is my distinct pleasure to welcome all of you here this morning to the launch of the initial public offering for Sygnus Real Estate Finance. The lead arranger for this public offer is Sygnus Capital, and the joint lead brokers are Sagicor Investments and Scotia Investments. So, let me start by introducing the distinguished members of the panel to you, starting with the ladies. Firstly, nearest to me is Mrs. Mishka McLeod-Hines, and she's the Vice President of Capital Markets at Sagicor Investments, the joint lead broker. The other lady wearing the green jacket, and although her husband plays golf, I don't think it's that green jacket. Sarah Cummings, who is the Vice President and Head of Capital Markets at Scotia Investments, joint lead broker. Now to the gentlemen. In between the two ladies is Mr. Beresford Gray, who is the co-founder, President and Chief Executive Officer of the Sygnus Group. To the left of Sarah is Dr. Ike Johnson, co-founder, Executive Vice President, and Chief Operating Officer of the Sygnus Group. And the gentleman on the far left is Jason Morris, co-founder, Executive Vice President, and Chief Investment Officer for the Sygnus Group. As you're all aware, the Sygnus Group is a Caribbean-based alternative investment solutions firm providing a diverse set of clients with customized and innovatively designed financial solutions across three interconnected business units: investment banking, investment management, and a tax advisory. Our alternative investment solutions covers real estate, private equity, and private credit, in which we are the regional leader. To start off our proceedings today, in bringing this exciting offer to you, we commence with investment remarks from our joint lead brokers, starting with Mishka McLeod-Hines from Sagicor Investments, whom I now invite to give her remarks. Mishka?
Beresford Gray, co-founder of Beresford Gray, co-founder and CEO, Sygnus Capital Limited. David Cummings, Vice President, Head of Real Estate and Projects, Sygnus Group. Jason Morris, co-founder, Executive Vice President, and Chief Investment Officer, Sygnus Group. Dr. Ike Johnson, co-founder, Executive Vice President, and Chief Operating Officer, Sygnus Group. Sarah Cummings, Vice President, Head of Capital Markets at Scotiabank Investments. Other members of the Sygnus team, Sagicor Investments, executive and team members, members of the media, ladies and gentlemen, good morning. It is my pleasure to be here today to announce and discuss another exciting opportunity for the investing public, the Sygnus Real Estate Finance Limited initial public offer, which will open tomorrow, Friday, July 23rd. Sagicor Investments is happy to continue our long-standing relationship with the team at Sygnus to bring yet another business venture from the Sygnus Group to market. We believe in the vision for Sygnus Real Estate Finance as it presents the type of company that is poised to provide returns to its shareholders while supporting local and regional companies. Over the past few years, Sygnus has built a strong reputation of being a company that is positively impacting the Caribbean region with innovative investment solutions for investors. Having journeyed with Sygnus through numerous occasions over the years, Sagicor Investments is proud to once again serve as co-lead brokers of the Sygnus Real Estate Finance IPO that will help to increase activity and rejuvenate our capital market space, resulting in a significant impact on the country's economy following what was primarily a quiet year as a result of the global pandemic. Our partnership and willingness to broker this deal is Sagicor Investments' total support of Sygnus' vision for expanding the accessibility of funds within the real estate sector. It is an example of Sagicor Investments' commitment to developing the economic capacity of the country while providing its citizens with a means to create, grow, and preserve their wealth. Through our e-invest platform, investors will be able to apply for this IPO online in the comfort of their home. E-invest is convenient as it allows investors to submit their applications electronically without having to visit their broker. E-invest can be accessed anywhere by simply visiting www.einvest.sagicorjamaica.com. We encourage everyone to register on the platform. All you need to register is an active email address. After you have registered, navigating the site is easy as the platform is quite user-friendly. You select the offer you wish to purchase and complete the short steps during the application process. It is very important to note, though, that you don't have to be a client of Sagicor Investments in order to make applications through Invest for this offer. E-Invest is a public platform and open to all. We look forward to aiding in the expansion of your investment portfolio through the purchase of Sygnus Real Estate IPO using E-Invest. Sagicor Investments is committed to playing a chief role in bolstering our economy and continuing our relationship with Sygnus to successfully meet the $4.5 billion target through this offer. Transactions such as these augurs well for the country. On behalf of your partners at Sagicor Investments, congratulations to the management of Sygnus for a successful journey thus far and your continued growth. Thank you for always trusting Sagicor Investments as your partner to execute innovative investment solutions.
Thank you, Mishka. We now turn to our second joint lead broker, Scotia Investments, and I invite Sarah Cummings to give those investment remarks. Sarah?
Hello. Hello and good morning. It is my distinguished pleasure to welcome you here today, both those who are in the room as well as those joining us online for this very exciting occasion for the team at Sygnus. We also want to say welcome to the Sygnus Group shareholders, partners, team members, and our colleagues from Sagicor. On behalf of the Scotia Investments team, let me first say a huge congratulations to the team at Sygnus Real Estate Finance, or SRF, on the launch of their IPO. We are really very pleased to have lent our expertise as joint lead broker for this transaction. I also want to emphasize our commitment to working with you as a client, as well as our other partners in the deal, to offer the market what is a unique investment opportunity that seeks to unlock significant value in real estate assets while providing shareholders with meaningful dividend income. Despite the pandemic, there remains significant interest from the investing public in the real estate market. Indications are that in the post-pandemic era, there is likely to be a renewed focus on business opportunities across a range of sectors. It is anticipated that this will create more opportunities for development of facilities that support these activities. This will be buoyed by the continued evolution of legislation as well as the government's focus on a framework for national development. Against this background, we anticipate that the real estate market will post robust performances in the post-pandemic recovery phase, particularly in the nascent commercial, light manufacturing, and logistics segments. As a joint lead broker for the IPO, Scotia Investments collaborated with SRF to deliver an optimal offer that allows investors to participate in the value that SRF has already unlocked in its real estate assets, in addition to future value creation opportunities. The SRF team has been very deliberate in how it executes its mandate to create value within real estate. SRF reported a record profit of $949.9 million for the 6 months February 2021 and $414.9 million for the 13 months August 2020. This achievement in profitability is a testimony to the success of their differentiated strategy to deploy flexible capital in proprietary investments and secondary partnerships. By executing on this mandate, SRF is expected to provide attractive risk-adjusted returns for its shareholders while providing downside protection. We also believe that SRF's comprehensive investment strategy, which is underpinned by a strong risk management and sound governance structure, will resonate with a broad range of investors. As the leader of Scotia Investments Capital Markets team, we pursue opportunities to structure solutions that meet the objectives of the issuer and creates value for investors. We are dedicated to building trusting relationships and delivering end-to-end financial solutions by leveraging our teams in research, asset management, and wealth management. As a joint lead broker, the SRF IPO represents a culmination of our commitment to partnership, creativity, and expertise that both our clients and the market can come to expect. In closing, I really want to thank the Sygnus Real Estate Finance team again for this opportunity to contribute to the company's growth and development. We look forward to continued partnership, not only on this IPO, but well into the future. I want to encourage our audience to reach out to Scotia Investments team at 888-429-5745 or email us at investmentinfo@scotiabank.com. Our team of investment advisors are available to assist both existing and prospective investors to find out more about this exciting offer. Thank you.
Thank you, Sarah. We now turn to the lead arranger to lay out the specific details of the offer to all of the current and future shareholders of Sygnus Real Estate Finance. To commence, I will now hand over to Dr. Ike Johnson, who will start the presentation, which will also feature Jason Morris and myself. Ike?
Thank you, David. And I think I should say all protocols observed, especially COVID protocols. You know, when the team was conceptualizing SRF, you know, we through other businesses see a lot of real estate opportunities, you know, come to us, and you know, these transactions aren't in any way traditional, and it would need another approach to unlock its value. So we put together a real estate investment company, SRF, and it's really a specialty real estate investment company, and it's dedicated to providing flexible capital to unlock value in real estate across the entire Caribbean. And SRF really does this by deploying its capital at the value add stage of the real estate life cycle. And you know, you might say, you know, that sounds a little cliche, but let me explain a little. The value add stage of the real estate life cycle is at a point where, you know, there's the potential to have capital gains on, you know, doing a transaction, doing a project on the land, and this will result in a situation where the value of the land and the effort that you put into the development of the land leads to something that is even more valuable. Now, how do we deploy the flexible capital to, you know, generate total returns for investors? And there's this adage that real estate is, you know, location, location, location. And, you know, this is very, very true. And, you know, the first step in the process is really to ensure that strategic property investments are done in high value, within properties with high value creation potential. Now, what does this mean? For example, if there's a large enough piece of land in a very strategic location which enables that land to be converted into, say, I don't know, say an industrial park, and the industrial park is within you know, close proximity to highways, and it just provides for a very good logistics operation. So when you identify these properties, then you'll now have to do the hard work and put the value creation strategies in place. The second thing that we do is invest in real estate investing notes. And these notes are really highly customized securities. And as I said at the beginning, for us to really unlock value in real estate, we have to be really creative. And our real estate investment notes are specialized and highly structured to meet the particular need of the development. Another strategy that we use is investment in joint ventures. So what we see a lot of is, say, developers or even individuals with a very strategic property. They may not have any expertise. Now, in other cases, SRF itself will have to become a developer. So SRF may identify a property somewhere in the Caribbean, and SRF would say, you know, the opportunity here is to, say, create a very, very good resort, for example. And these are the type of investments where SRF will deploy its own capital, and in that case will unlock value in real estate. Now, how do we unlock value? So we can break this down into two sections. And the first is by doing proprietary investments. And as I mentioned before, we have to do strategic property acquisitions. The property must have a real strategic purpose. If it's an industrial project, it has to be located in a highly strategic location to provide with the users of that facility with the ability to enhance on their logistics. And a next piece of the value creation is in the whole conceptualization and planning. So Sygnus Real Estate works with some of the top architects, engineers, a few that are seen here now. So we typically put together a really strong team that will be able to help us along the way with the planning and the execution of these projects. And, you know, along the way, no real estate transaction is really the same. And what you typically find is that we have to do creative structuring for our investments. So, you know, from using instruments such as vendor notes, both internally and external, to unlock value in real estate. We establish a lot of partnerships. To be very successful in what we do, we have to establish a lot of partnerships. The main strategy that we use to unlock this value in real estate is by structuring real estate investment notes. And, you know, we have a very, very good team. We have a full investment banking team. We have a full real estate team that, you know, they take every opportunity and they look on it, you know, as special, and they look on it, you know, as a special case. And as I said before, no two real estate transactions are the same, so they have to be customized significantly. And I think that wraps up my presentation. So I ask Jason now to tell us a little bit more about the IPO.
Good morning, everyone. All protocols observed. So, you know, I could have just gone through what SRF is. And to summarize, SRF is a specialty real estate investment company. It is utilizing flexible capital, debt and equity, and deploying that into real estate assets right across the Caribbean region. And that involves, you know, acquiring strategic properties, investing in real estate investment notes, doing joint venture partnerships, and doing developments. And the way that SRF now generates return for you shareholders is when it exits its equity positions in the joint venture partnerships, the strategic property investments, and the developments, it gets capital gains. And when it generates current income from the real estate investment notes, you combine those two things together, you get total returns. So, what are we offering? We're offering 3.9 billion opportunities to invest in a specialty real estate investment company that unlocks value in real estate in a unique way. And that unique way, as I could have described, is through proprietary investments and secondary partnerships. And those two things combined basically utilize the skill set that SRF has on its alternative investment management platform. We have mergers and acquisitions skill set, we have private equity skill set, we have private credit skill set, we have real estate and project finance skill set, and we utilize those skill sets together to look at any piece of property, realize that there's value in it, and figure out how we're going to unlock the value. So we are giving you 3.9 billion opportunities to get access to that specialty strategy. And we'll go through this a little bit more later on. Now, this opportunity that we are presenting today has already unlocked some value. How much value? SRF is less than 2 years old. And in the first 13 months, which is the first financial year in the company, which, you know, was audited by KPMG, the company delivered 414.9 million Jamaican dollars in net profit, which is kind of unheard of for a company that started with an idea and a piece of paper. Fast forward to the 6-month period subsequent to the audited financial statement, and SRF has unlocked almost $1 billion in net profit. If you combine the first financial year and the 6 months, you're talking about almost 1.5 billion Jamaican dollars in net profit. And I'm pretty sure you're going to be hard-pressed to find any company anywhere in Jamaica that start out with that type of track record. So that is the opportunity that we are inviting you to participate into. No, but it doesn't stop there, because the 6-month financial results was as of February 28, 2021, right? And you all, if you read the prospectus, you will see that. But in the prospectus, we also outlined for you that there were some subsequent events after the end of the financial statements that's contained in the prospectus. And those subsequent events involve 2 acquisitions. One of them closed the transaction for $6.5 million US dollars, and the valuation on it is $7.2 million US dollars. And this is in the prospectus, so I'm not revealing any material, non-public information. And the second transaction we acquired for $6 million US dollars, and the valuation on the underlying assets is $12.97 million US dollars. So if you add the acquisition cost, you're gonna get $12.5 million US dollars in acquisition and $20.17 million in valuation. So even if you want to apply whatever exchange rate you want to apply to those 2 assets, and whatever discount you want to apply for closing cost, you realize that there's another substantial value that has been unlocked. So I'm speaking about today that we are here speaking to you, and the offer open tomorrow. That value has already been created in SRF. So you're buying into something not just based on the financial statement as of February 2021, but as of today, where the value has already been unlocked for you. So the only question you need to ask is, okay, what kind of pricing am I getting relative to the value that has been unlocked? And we soon get to that. Don't jump the gun yet. So, to represent the value that has been unlocked for you in a different way, SRF has $3.6 billion in shareholders' equity as of February financial statements, which is the 6 months. So this $3.6 billion don't include the 2 transactions that were subsequent to the financials in the prospectus. But I want to make another point. This $3.6 billion in shareholders' equity is coming from $2 billion that was raised in a private placement. So the company started off with $2.08 billion in share capital and has transformed that initial share capital into $3.6 billion, which belongs to the shareholders. And we are saying to you, you coming in, you're getting a share of this $3.6 billion because, as you will see later on, you're buying into this IPO at a substantial discount. So I want to just ensure you're following me that we start with an idea and paper, raise some money, and convert that money into $3.6 billion as of the February financials. And I already explained to you that additional value, when the next financial statements come out, substantial additional value would have been unlocked from just 2 transactions alone. We're not talking about, all the stuff that you have seen in the newspaper and breaking ground and so forth and so on, or any value that's going to be unlocked from other assets that we have on the books or other assets that will be acquired. We're just talking about you coming into a transaction where substantial value has already been unlocked for you, and you are immediately getting part of that cake to have and to hold and to consume. Now, in terms of the company's balance sheet, total assets, the company has $5.7 billion in total assets. Let me repeat, $5.7 billion in total assets. How much money did the company start with? Share capital, $2.08 billion, and a piece of some ideas on a paper. And we have thus far converted and created that into substantial value and assets, and it's real estate we're talking about. You can go and look on it, touch it. If you want to taste some of the dirt to see if it's real, yeah, you can do that too. It's real. So it's not paper money or, play money. It's real. Now, out of that 5.7 billion in total assets, the company has $5.4 billion in what you call its real estate investment asset portfolio. So remember, I spoke to you about how SRF goes about executing its mandate, which is strategic property acquisitions that have high value creation potential. Then he spoke about real estate investments notes, and then he spoke about joint venture partnerships, and then he spoke about developments. So the $5.4 billion in real estate investment assets is only comprised of the strategic property acquisitions, the real estate investment notes, and the joint venture partnership. Nothing else is included in that 5.7 billion. So that 5.7 billion was as at the February financials. So if you add these subsequent events that I spoke about with a combined value of 20.17 million US dollars, you can see that the total assets of the company has increased by a significant amount, as would the shareholders' equity. And I'm going to come back to this point in the final slide. But for now, what I want to do is to introduce David to come and show you some of those fantastic assets that SRF has already gone out and acquired on behalf of its existing shareholders and on behalf of all of you who we know are going to participate in this IPO to get very good real estate assets and real estate investment and unlocking of value in real estate in your portfolio at a discount. So, David, do the honors.
Thank you, Jason. So what are some of these assets that we've been speaking about, and translating what Ike described and what Jason also described? So one of them, which of course is detailed in our prospectus, is the Ocean's Edge project, which is actually in Discovery Bay. It comprises 16 luxury townhouses scheduled for completion by November of this year. So it's just a few months away from delivery, right at the seaside near to Port Seco Beach. This one is one of our real estate investment notes, very well structured note that we did here. And as you can see, it's a very attractive design, and I'm quite certain that the purchasers, pretty much, they're all sold already. And one example of how we have structured a note to the benefit of clearly the purchasers, to the developers, and of course ourselves here at Sygnus Real Estate Finance. The second one I'll speak about is also a real estate investment note, a RIN. And this one is in Norbrook, Wassa it's called. This is actually 8 luxury apartments. Pretty much they're sold. There's only one unit that's remaining, which I understand is now under offer. And these 8 apartments will be delivered by Christmas of this year. Construction is well underway. Again, another good example of a carefully selected project, a carefully structured note that we are delivering to the market. The third one I'll speak about is one of our joint ventures. And you would have heard Ike and Jason describe how this is one of the ways in which we help to unlock capital. This particular building here is called 1 Belmont. It's actually a corporate commercial office on Belmont Road, 123 Belmont Road. We actually break ground on this one here in the coming weeks. It is, as you can see, a very attractive, a striking architectural design, 5 floors of commercial with 4 levels of parking. I think we've all gotten slightly concerned about the adequacy of parking when we go to buildings in and around Kingston. This one has 4 levels of parking provided. So I think certainly the persons who will be tenants in the building, as well as persons who will be the customers and clients will be happy with the way we have spent the time to design this. Plus, this building also comes with a lot of advanced features that the post-pandemic world would love and expect. Touchless elevators, touchless doors, touchless bathroom fixtures, all color So again, this joint venture here has helped us to unlock significant value on this 1 acre property on Belmont Road. Spanish Penwood, believe you would have seen this in the news most recently. We broke ground for this a couple of weeks ago. The keynote speaker was the Prime Minister, and this is an industrial project. And I should pause here to highlight that what you've seen here is a good spectrum of the markets that we play in. So you saw residential, commercial, this now is industrial. So this project here is being delivered, 32,500 square feet of office and workshop and warehouse space, has received extensive coverage in the media, and we will be delivering this next year to the client IMCOP Jamaica, who the local dealers for Caterpillar. Again, an example of how we use a partnership-based approach to customize a specific solution for a client. Now I switch to hospitality. So this is Miami Bay, again a property that we've invested in. This is 30 acres that we acquired in Miami Bay. Just to give you context, this is sits at the end of the North-South Highway. To the left, as you see the screen, is Old Fort Bay. To the right, as you see on the screen, that is the former Jewel Duns River, now to be Sandals Duns River. I believe ground was broken there recently by the Prime Minister and Adam Stewart for their development there. So we're right in the middle of those two marquee developments. In terms of how we've been unlocking the value so far with this property, we have already received NEPA-DSC pre-approvals for a wide range of options for us to do here: a hotel, villas, we can do condos, apartments, restaurants, a spa. So we're currently in the middle of working with our design team to see how we're going to unlock the value here, exactly what we're going to do for this particular property here. But again, you know, this is one property that our shareholders, I'm sure, would love to be a part of, and this IPO will give you that opportunity. I now go back to industrial. I think in the post-pandemic world, the globe learned the importance of logistics and particularly nearshore logistics in that term. So what you see here is a Google Earth image. The blue triangle represents 55 acres that Sygnus Real Estate Finance has acquired for an industrial project. Just to give you context, just to the top of the blue triangle, you see that white building, that is the Wisinco warehouse. Just above that, that cluster of buildings there, that is Lasco. And not far off the map to the left is the Grace Kennedy and the soon-to-be Caramid facilities, which is under construction. So what you see here, again, represents one of our many property investments that we will be looking to unlock the value. We're still going through certain feasibility studies and designs, but rest assured, we have a lot more value to unlock with this particular property here. Finally here, we have also just acquired former French embassy. This is actually on Hillcrest Road, 3.2 acres in Kingston 6. I think I should repeat that, 3.2 acres in Kingston 6. That is now part of the Sygnus Real Estate Finance property portfolio as property investment. And once again, we are working with our team and with our partners to put together what we are sure will be a plan that the market will look forward to receiving. Again, 3.2 acres on Hillcrest Road in Kingston 6. And with that, I now hand back to Jason, who will talk us through the precise details of the offer. Thank you.
Thanks, David. So, just to summarize what you just saw, what David just showed you, right? We showed you some real estate investment notes, which are unique, customized way to finance real estate assets through partnership and unlock value in those real estate assets, which obviously shareholders will get the benefit of. Then we showed you joint venture, which, again, is a unique way to partner with people who have strategic properties, unlock the value in that, and shareholders get the benefit, as well as, obviously, the other partner. And the third thing we showed you were property investments. So these are what you call the strategic property investments. So this is not any willy-nilly go and buy an acre here, 2 acres there. We're speaking about 3.2 acres in Kingston 6. We're speaking about 55 acres in the logistics and industrial belt of Jamaica. And we're speaking about, when it was acquired, over 29 acres of beachfront property. We sold off half of it, obviously. So what we are trying to show you is that we are giving you diversification across all the different categories of real estate. Industrial, commercial, and when we say commercial, we are not doing a commercial development or executing a commercial project for hair salons and barber shops and a clothing store. We are focusing on the corporate segment of commercial, which means this is where people move their head office and their headquarters to. That's what the segment of corporate that we're focusing on. So, having said all of that, the question now is, what are we, offering to you? We talk a good talk, we show we make money. How can you make money? So, first thing is that the IPO was designed in 3 different pools. The largest pool is what you call a non-reserve pool, or for the general public. 35% of the offer is going to those prospective investors. 32.5% of the shares are reserved for key investors. So how do you qualify as a key investor? A key investor has 2 qualifications. One of them, if you are a shareholder of Sygnus Credit Investments Limited, that is SCI, the company that's already listed on the Jamaica Stock Exchange that focuses on private credit. If you are a shareholder in Sygnus Credit Investments Limited, then you are in this 32.5% key investor pool. And the other definition are basically key suppliers of Sygnus Real Estate Finance. The last pool, but by no means the least important, are the existing shareholders. And 32.5% of the shares have been reserved for those. And these are the people who, when we were doing the private placement, we go and present some pretty pictures and some PowerPoint slides to them, and so we have this fantastic idea of how to present a unique way to create value from real estate assets across the Caribbean. That has not been done before. Nobody has seen it before. So it's really, an experiment, so to speak, from their perspective. And they looked at it and said, well, it looked like it can work. Let me give you some money. And they put down their money where their mouth was, right? So now that we have unlocked substantial value for them, we are giving them a second bite at the cherry. So that's the reason why we have a reservation for them. And the reservation for the key investor pool with the SCI shareholders is because SCI, which has the Sygnus brand attached to it, just like SRF has the Sygnus brand attached to it, that branding that has been building up by those shareholders who put their money in IPO, put their money in private placement, put their money in APO, obviously SRF gets a benefit from that. And so we are saying, thank you, once you are being a Sygnus partner, this is how we reward you. So, just one note here is that the SCI shareholders, the record date, you would have had to have owned SCI shares as of and on June 30th, 2021. So you can't go and buy SCI shares today and participate. Just want to clarify that. Subscription price per share. So the shares are, for the non-reserve pool, $19.30 and 12.70 US cents for the USD share class. And all we did was we priced the offer in J dollars and then use the exchange rate to convert to US for the US share class. And the rate that we used was 152 to 1. So the key investors get it at $18.30 or 12.10 US cents. And the existing shareholders, $17.90 or 11.7 US cents. And one point I want to highlight here, based on new foreign currency guidelines, we cannot accept more than 15 million US dollars from the US dollar share class. Let me say it again. We can't accept more than 15 million US dollars and the US dollar share class. So we have a cap. So this slide is the most important slide in the entire presentation. Yes, we showed you a slide, how much money we make and how much shareholder value increase and all of that. Ultimately, this is the money slide. So we just showed you before that the offer for the public is $19.30 in J, and I'm just using J here just to show you the value that you are getting. And for key investors, it's $18.30, and for existing shareholders, it's $17.90. Now, what I'm going to do to show you the value that you're really getting, I'm going to just walk you through a summary of what I presented on the financial before, and then bring you back to this share price. So, reading from right to left, in the private placement in August 2019, less than 2 years ago, $13.40 is what the shares were sold for. Fast forward, 13 months later, in the end of the first financial year, which was audited, the book value, $15.74. So we would have increased value for those shareholders by 17.5%. Fast forward 6 months later to February 28, which is in the financials, the book value is now $20.19. Would have increased value or created an increase of 50.7% in value on that $13.40. But we have also outlined in the prospectus, and I've already presented, that there were some subsequent events. And those subsequent events are going to result in, right now as I'm speaking, in a worst case scenario, a book value of $24 per share. And I already gave you the math, right? So, that adjusted book value of $24 per share is almost 80% above the original value where the company started at. So the question now is, what are we offering you these shares at? What juice is in it for you? Well, at $19.30 per share for the general public, that is a 19.6% minimum discount to what the value that has been unlocked in the company as of right now is. And at $18.30 for key investors, that's a minimum 23.8% discount to what the value that we have unlocked right now today is. And at $17.90 for existing shareholders, that is a whopping minimum 25.4% discount to what the value that we have unlocked is. Let me say it another way. Let me say it a different way. Because some people understand percentages, some people understand some simpler term. At $19.30, that's a price to book of 0.8 times. The price divided by the book value, 0.8 times. And book value, as you know, is where if the world come to an end and you sell off the assets, how much value would you get? So we are saying right now, we have unlocked on the balance sheet $24, and you are getting it at $19.30. So you are buying it at 0.8 times what it really worth. So that's a 20% upside to what the book value is, and that don't include any other value that has been unlocked or any other value that will be unlocked in the future. For example, from the money that we're raising now. And at $18.30 for key investors, that's a 0.76 times book value. What asset can you go out there and buy at 0.76 times book value? Where you have a marquee landmark beachfront property. You have a marquee landmark industrial asset. And you have multiple commercial assets. We just showed you one of them, which is Farmer French Embassy. Because everybody knows Farmer French Embassy, right? So what we are saying, is we go and acquire these assets, unlock the value in it, and giving those assets to you at a discount. That's what you are buying into. You are buying into value that has been created so far up to this point, all the negotiation that took place. So for example, when Dr. Ike J and and David sat down and negotiated with the owners of these strategic assets. In Mammy Bay's case, SRF bought over 29 acres of beachfront property, and the value of it was 24 million US. It's in the prospectus, not material non-public information. But we start off with an equivalent of about 16 million US, because that's roughly what 2.08 billion was. So how did we acquire an asset for 24 million US? This is not, oh, I see a piece of land, I'm going to buy it because I have cash. We have to do certain very ingenious and creative ways to structure the financing. So that's what Ike was speaking to, you know. To structure the financing where we use an asset swap, which means we give the owner having pretty beachfront property say, listen, accept some SRF shares as part of the purchase consideration. 24 million US, see some cash here, see some SRF shares here. As a matter of fact, we need a vendor mortgage from you. And he agreed. That's not easy. Think about it. Me have a beachfront property, we value it, you know, whatever. Me I sell it to you for 24 million US, and you are come to me and talk about you want to give me shares. And money, I want cash. And on top of it, you want me to lend you money to buy it. That is a particular skill set that resides on our alternative investment platform. So if somebody... So what I'm trying to show you, if you're asking to yourself, how is SRF different from a REIT? How is SRF different from a company that just go and buy real estate that somebody else construct and build and then make money from that? Or how are we different from another real estate company that you are just focused on doing developments? I am trying to show you that we are unique, because when we buy that beachfront property, we didn't just sit on it. We managed it. What we mean by manage it? Well, we signed contract to do beach enhancement work. We put a big wall around to secure it because it was not secure before. You put in 24-hour security. All of that, strategizing and enhancement. We're going to get pre-approvals for many things. All of that enhance and increase the value of the asset. And all of these things that we are speaking about, the structuring of a note where, okay, a man have a good piece of real estate, him don't have all the money to finance it, him go to a bank, the bank want a special way to fund him, which might not be not be in line with what he's trying to do. So we look at the problem and say, okay, this is not a problem, this is an opportunity. I'm going to solve it for you, but for me to solve it for you, guess what happened? Me want piece of the profit when this thing are done. And that piece of profit when me I take as part of the structuring goes to who? Who own SRF? Shareholders. So, in closing, the offer open tomorrow, July 23rd, and it closing August 20th. And you have a unique opportunity to invest in a specialty real estate investment company that you have never seen offered on the market before. First time you're seeing it is today. You are getting that unique investment strategy at a minimum of a 20% discount to the value that has already been unlocked and on the balance sheet. The company have robust governance. So it have an independent board of directors with independent chairman. It have subcommittees of the board. Each of them are chaired by independent chairpersons. The majority of those committees are independent. In the decision-making process, there are two separate committees and there is independence built in. So we have a robust governance structure, just like what you have in any well-run financial institution anywhere in the world. So that's what we are offering you. It's not just about money. And final point, when you invest in SRF, you're not only unlocking value in real estate assets by itself or to make money for yourself, you are assisting the economy wherever those assets are located. We all saw what happened with Spanish Penwood and the Inca headquarters. That took almost a year to negotiate and structure, because the lease agreement that was signed, it was signed from February, you know, even though ground just break. What does that tell you? It tells you that SRF is not a play-play company. A company that makes $1 billion in profit is not a play-play company. It has significant opportunity to scale. You are buying into a large company that is going to unlock value in real estate assets across the Caribbean. And it started out by focusing on Jamaica. Why is focus on Jamaica first? Because we felt when we did all our analysis that the best risk-adjusted returns, the best bang for the buck, would be in Jamaican idle land all over the place. Whole heap of value can be unlocked. But there was an absence of the creativity and the financing structure and the partnership that's required to unlock the value in these assets. And so we designed SRF to do just that. And we have started, and we want you to join us on this pioneering journey in unlocking value in real estate assets across the Caribbean, starting with Jamaica land we love. Thank you very much.
One word, wow. Jason, thank you. Ike, thank you. So before you all rush for your checkbooks and call the broker to tell them to add a few more zeros to the figures you had in mind, it's now time for us to give you the opportunity to ask us some questions. We have made appropriate allowances for those questions to be fielded from both those present here as well as from our attendees online. So kindly wait to be acknowledged, and when you are starting, kindly give us your name, or if you're with the media, please state which media house you represent. So without further ado, we now open the floor and the lines for questions. Please wait for the microphone.
Durant Pate. Hello? Right, yes. Durant Pate, Jamaica Observer. Last year regarding the Sygnus IPO, there was a challenge that necessitated an extension of the time. Question, how certain are you that you would not need another extension with this IPO?
Jason, you want to take that?
Mic check. Thank you for that question, Durant. So first, let me just clarify something. You have presented a challenge or an obstacle where there was none. If you recall, in the APO, SCI, which is different from SRF, because we're discussing SRF today, did its APO during Christmas, when everybody and them grandmother and them grandfather and them auntie and uncle very, very busy and don't have much time to focus on investments. So basically the market got under 2 weeks to look at this offer. And there are many institutional investors, pension funds, insurance companies, corporate portfolios who have an approval process that in some cases take 1 month. So the extension of the IPO wasn't as a result of problems. Of the IPO wasn't as a result of problems. It was to facilitate other persons who needed to conclude the approval process so that they could participate. In fact, we left more than $3 million US dollars equivalent on the table because we were very, very clued up about the fact that we do not want the offer to go into 2021. It needs to close in 2020 and remain in 2020 so that we can move on with the business of delivering shareholder value for SCI shareholders, which of course, you know that the 9-month results showed you record 9-month profits.
My understanding that the challenge had to do with the approval process for the pension funds. They did not get enough time in order for the board to meet in order to get approval. And my point is, this should have been thought about before, and therefore it would not have necessitated that extension.
So again, I'm saying to you that it's not about thinking before. We have an IPO. There are many shareholders. Some pension funds went and did round robin approval process and got their approval in time. And if a pension fund who put in a large ticket, if a man say he putting in $2 million US and ask us to wait on him because him get the first set of approval and him have another set left, then obviously we're going to facilitate him. So I'm saying there is no problem. The IPO for SRF is open for 1 month, and as is contained in this prospectus and all prospectus, the issuer can extend the offer for as long as they want, or they can close the offer before the opening date if they so desire. So I'm saying there is no problem. It's simply we sat down, look at how much capital we're trying to raise, open the offer. When you get to the point where you need to make a decision as to do you extend or do you close early, you make that decision. So it's not a problem. It's a normal market operations. Some IPOs open for 1 day, some for 2 days, some for 1 minute. There's no problem. Yes. Hello? They will turn it on.
Let me just add to good morning again, everyone. Let me add to Jason's point. You know, Sygnus is, as you can see, we have a very strong team, an absolutely awesome team. We are focused on execution, and we are very clear about our strategy. So when we are doing APO or IPO like this event or a private placement, it's all within a very focused strategic objective. So now we are doing this IPO, and our focus is to execute this, and whatever it takes to execute it, we will do that. Why? Because our broad objective is to create value for our shareholders, or value for the shareholders of SRF, and in the case of SCI, those shareholders. So extension, the timing, all those issues are not those are minor things in the broad goal of Sygnus. Value creation is what we are really, really focused on. You know, the team is really focused on that. So we don't really get bogged down in, to be honest, in those matters. We get bogged down in changing challenges into opportunities, so that at the end of the day, at the end of this IPO, we raise the capital to execute on what Jason said. In the case of SCI, raise the capital to execute on what we had promised to shareholders. It's all about value creation.
So we have a question up front here. Mr. Or yes, go ahead.
Thank you. Neville Graham from the Gleaner. You say you're targeting 4.5 billion. Targeting market for 4.5 billion, about that. Up to 4.5 billion. You have a pipeline of 5.5 billion. And you have projects, certainly, to be executed in short order, somewhere in the region of about 3 billion. Explain the numbers to us. And one, will we see you coming back to the market very soon for other funds? Or two, will you be relying on partners such as bankers and so on to execute?
Jason, you want to take that?
So thanks for that question, Neville. So our pipeline, and a pipeline, as you know, is very fluid. When we were writing the prospectus, it was 5.5 billion. Obviously, it has increased since then, and it increases every single day, because as SRF gets more exposure, there are a lot more persons who realize that, hey, I should go and talk to these guys about XYZ. So that happens every day, right? So the IPO money is going to be combined with revolving credit lines from commercial banks, as well as debt that SRF will issue in the market at whatever appropriate time it is to do so. So just to outline for you, what SRF is, one of the objectives of SRF right now is to raise what we call dry powder in alternative investments, which means cash that you can take and go and invest. And that dry powder will involve the $3.9 billion in IPO money, which will go straight to our bank account, of which we will pay out up to $1 billion in vendor mortgage, which I would have highlighted what a vendor mortgage was earlier. Then, once we get approval for additional revolving bank credit lines, let's say we get, $2 billion worth of credit lines that we can draw on. Because remember, we are doing project finance, so we don't need all the money at one time. We need the money in stages. So having revolving credit lines where you can draw, when I need to deploy $100 today, I draw on a revolving credit line, deploy it. I need $200 next week, I draw on a revolving credit line, deploy it. Rather than going out and raising all of the debt up front and have a huge interest expense running. So that's the reason why we need revolving credit lines. So if you add IPO money of 3.9 billion, subtract 1 billion that we're going to pay out in vendor mortgage, or up to, and subtract about 175,500,000 in IPO expenses, that net amount is going to be combined with revolving credit lines, which I can't give you a number on that now, because we are in the process of applying to various commercial banking partners, and we see what they give us. And then that will determine how much debt we actually raise. So all I can say to you is that the money that we are raising is nowhere in shape or form close to the amount of money we need, which means we don't have a problem deploying out the capital. That's the first thing. Second thing, we won't be coming back to the market for APO money in, say, the next 12 or so months. Because we first have to, we have Spanish penwood, which is grown on. We need to complete that in the next 12 or so months. We have one Belmont that we're going to break ground on very shortly. We need to complete that in, say, the next 24 months. When we exit those assets, we will get back that cash that we invested. And that will then be utilized to refinance, invest into other projects. So that's the best way I can explain it to you without giving you what the total debt amount is from revolving credit lines and what the total debt amount is from bonds that we'll issue, because we don't have that. Those figures depend upon what happened, for example, with the IPO money. So I hope I've answered the question a little bit.
Sure, I believe we had a question from Mr. Lukim here first.
You have a very interesting dual currency offer, but you've also placed a limit on $15 million on, I think, your preferred shareholders. If you get more than that, how would you handle those?
We will simply have to prorate the applications so that we take no more than 15 million, because we cannot take more than 15 million based on what the regs say. So that's what we'll do. We simply prorate the orders up to 15 million. So if 100 persons or 3,000 persons apply for a US dollar share class, everybody will get some, depending on how much you applied for. And we use a fair formula to do that. So that's the way we'll have to do it.
So I believe David Rose had a question there. Sorry, we have a question online. So we'll...
Yes, this is from an investor. What would you say to the people who might look at the management fee of 2% of total assets and not net assets, plus performance fees and the possibility of dividend to the special share, and think that this is relatively expensive?
Excellent observation. I'm so happy that question came up. So, the investment manager gets 2% of assets under management. Why? Total assets under management are not net assets are net book value. Very simple. If I take $100 in equity and I invest it, I put half of it in a REIN and half of it, for example, in a strategic property acquisition, right? $100 done. Then I go to a bank and I go to the debt market and I borrow another $100. The amount of work that we have to do, the sleepless nights, the long negotiation with the owners of strategic assets, we still have to do it for the other $100 in debt that I take. We still doing work. So the question, or the answer to the question is to mitigate against the investment manager running roughshod over shareholders. What have we committed to? We have committed to ensuring that the management expense ratio, which is the total operating expenses divided by the total assets, should be no greater than 3.5%. So there's a 2% management fee, and then you have some other expenses. And we are saying on a long run steady state basis, and it's not there, and right now those ratios, which is in the prospectus, is like, I don't remember, 2 point something %. So that's one way in which we ensure that the investment managers' objectives are aligned with shareholders. The second way is to say, you see operating expenses, you need to operate the company efficiently. So the company needs to ensure that from an operating efficiency level, total operating expenses divided by total investment income should be less than 45%. So both the management expense ratio and the operating efficiency ratio, if you take those two ratios and go and look at any company in Jamaica any company listed on the Jamaican Stock Exchange that has an investment manager and compute the management expense ratio, you're going to see that SRF is very we are very efficient. And if you take it to international firms, you will see that pretty much we are following global best practice. So final point, SRF could have, instead of coming to shareholders to raise equity, we could have chosen to issue a preference share, which would be debt. So the question is, if we funded the company with debt first, what would the manager be paid on? Because if you're trying to get net book value, the net book value would be pretty much, it would almost be zero. So basically the manager would go out and do all of this great work and give shareholders all the return and don't get compensated for its ingenuity, its ideation, and its ability to make money for shareholders. So what you need to watch is, what is the return on equity? What is happening with shareholders' equity? And once you watch those two figures and watch the operating expenses ratio, operating efficiency ratio, and the management expense ratio, you will see that we are doing nothing different from what Blackstone, the global leader in alternative investment, is doing. So Sygnus is pretty much the Blackstone of the Caribbean.
Yes. David Rose, I believe, has a question. Go ahead.
Good afternoon. Afternoon to the Sygnus team. Afternoon, David.
How are you?
So, a couple questions. So, really, as Dr. Johnson mentioned earlier about the real estate notes. So similar to how you would have done it for SCI, these structured notes, you mentioned profit share, for the prospectus, you had profit sharing and other forms of compensation. In respect to Ocean's Edge, could you give an example of how you benefit in that form of real estate investment and the downside protection that exists to protect shareholders?
Excellent observation. This gives us an opportunity to kind of explain to you more real estate investment notes, because it's kind of new. So, effectively, what we do with a real estate investment note, we look at the opportunity, ensure that, for example, it's an opportunity where whatever the partner is doing, it will be successful. So when Ocean's Edge came to us and said, yo, we want to do this thing, we evaluated it and realized that because it is on the coast and you have a fantastic sea view and it's only 16 units, so you see, and you would have seen all the other assets that we did, Reens, we don't have any 100 or 150 units. They're all, you know, small to medium size, which means that we can manage the risk. So what we have in real estate investment notes is we get paid a coupon, a pretty low coupon, and then on top of that, we get paid a share of profit in the case of Ocean's Edge. So effectively, shareholders get some income while the transaction is ongoing until everything delivered and we exit. But we also have a stake where we get a share of profit of whatever profit is made at the end, which is upside our gravy. And shareholders are protected because the entire development is what is backing the real estate investment note. So it's actually, your investment is actually over collateralized. So we are not financing the investment at a loan to value of 50 or 60%. The entire project is backing the real estate investment note. So when we say that real estate investment notes is a unique value proposition to unlock value in real estate, what we have done is basically provided a solution to a problem that existed in the market, and Ike mentioned it in his opening statement. We have seen many people come to us and say, you guys do private credit, we have a real estate thing, can you finance me? We said, no, Sygnus credit investments don't take project risk or construction risk or real estate risk, a different risk it takes. It invests in going concern companies, not projects. So it's a different vehicle altogether. So we created this vehicle to unlock value in real estate assets in all shape, sizes, form, color, everything. Any problem within a real estate and you want to solve it, just come link Dr. Ike and David.
Thanks, Jason. A couple more questions. So one that came to mind was the expansion to the Caribbean. I know that SCI specializes to diversify risk in that sense. For SRF, it's diversifying the type of project. So what's the focus for the Caribbean in the future going forward?
Well, you always have some interesting questions, you know. You want us to give away our strategy to the competition?
No.
So, what I can say is we started out by focusing on Jamaica, as I would have explained before. And we are looking at quite a number of different opportunities across the Caribbean. And what's very interesting is, actually happy you bring up this point, What's interesting is that because SRF is on an alternative investment platform that Sygnus manages, and you have private credit on the platform and you have private equity on the platform, you see when SCI is doing its private credit business, there may be opportunities that arise from those partners or portfolio companies which are specific real estate exposures. So because we have the relationship with the entrepreneur and the businesses already on the private credit side, when those same entrepreneurs who have several multiple businesses want to do something on the real estate side, get who them talk to. them just say, yo, your real estate company, make them come talk to you about that opportunity. And so that's a benefit that SRF get by not being a standalone investment company, but by being part of a platform. So to answer the question, we're looking at multiple things with partners who we are already familiar with, and there are also people reaching out to us, but I can't give you an answer right now. Link us back in maybe another 6 months and we can give you some better color.
All right. Ask 2 more questions and then circle back, or?
Sorry, hold on there. Are there any more online? No more, okay.
All right. So with respect to number Vasa earlier, yes, it's Vasa, it's German. So earlier you spoke about, about development supposed to be finished by December, and you spoke about a real estate investment note. Is there any more color you can give to the project? When I'm speaking about color, I'm speaking towards, when I'm speaking about color, about the progress right now of the project. Reason being, we understand Spanish pen would just started in a sense, but they're trying to take collaboration to Norbert Vasa in the future.
Sure, certainly. You're asking about the
progress,
the likely completion schedule.
Yes.
It's Norbert Vasa will be delivered in December of this year. So construction is well underway. It's going well. It will be delivered. And as I said before, of the 8 apartments, 7 already been sold, and the last one is currently under offer. So it's going very well.
Thanks. But Jason again. So with respect to Spanish Penwood, if I'm to understand, it would be the case whereby Sygnus Real Estate Finance would own the property under a lease agreement and potentially dispose of it to another partner in the future.
Okay, so good question, right? So let me just clarify. So Dr. Ike and David, when we were strategizing what assets should we go and buy when we didn't have, balance sheet was just cash, looked and saw and said, for our industrial exposure, we need to acquire certain assets. So they went and spent 2.3 million US, which is in the prospectus, to buy the assets. So that's the first set of investment that was done. And then, in discussions with our partner, decided to do a build to suit, and we have committed 550 million Jamaican dollars in equity to invest in the construction and the development and to complete it. So, having gone and negotiated the lease agreement, we are now in the process, of course, of looking to exit the assets. I don't want to give you any. I don't want to give you any information that's not already contained in the prospectus. So I won't go any further. Safe to say, if you have an asset where you have a 10-year lease paid in US dollars, and the lease signed from February, you breaking ground in July, then clearly it's not going to be very difficult for us to dispose of the assets. That's all I can say.
All right. So I think with that, we bring the question and answer session to close. There are no more questions online. And really, it's been some excellent questions. So thank you to all of you persons online and in the audience here who have given us questions. The fact is that as we embark on making Sygnus Real Estate Finance a public company, your company, we now invite our co-founder, President and Chief Executive Officer, Mr. Beresford Gray, to say thank you and to have the final words. Once he has concluded, we look forward to seeing you on our soon-to-be-expanded list of shareholders and give you the assurance that you will always be very proud to have made that decision. Beres?
Thank you very much, David. And all protocols observed. Good morning, ladies and gentlemen. Wow. Wow. Let me say thank you for coming out to support this very important milestone in the life of SRF. But I want you to listen to what the team discussed this morning. That's the caliber of the Sygnus team. These are the people who are being stewards of your money. When you invest in SRF, these are the guys who are thinking through difficult issues, looking at opportunities, creating value, and driving growth of your capital. This is what we are talking about. So, when you think about SRF, what SRF is offering, as Jason said, 3.9 billion opportunities to invest in unlocking value in real estate. I really want to go and apply like now. I mean, seriously, like I had a speech over there, and I couldn't bother. I couldn't bother read it, okay? Because I need to talk from my heart. Like, the value that SRF is going to bring to investors through using flexible capital to creatively harness and unlock value so that we can grow shareholders' value. In just 18 months, we have moved shareholder value from 2 billion to just under 4 billion. That's tremendous. That's tremendous. If you are not convinced by that type of transformation in value, then it's very difficult to convince you to make an investment. I am absolutely convinced. The other thing I want to point out is profitability. This is a big takeaway for all of us. When we buy shares into a company, we want to know that the firm is profitable, has a track record of profitability. Jason pointed out that very eloquently and went through with David and Ike how those profits are created. In the first 13 months of operation, SRF created 466 million in profit. Sorry, 466 million. And for the last 6 months, almost $1 billion in profit. All of that. All of that is value for shareholder. Value for shareholder. And that's why when I add to what Jason said to Durant over there, we're not so focused on the details around different eventualities. What we are focused on is what is the pathway to create shareholder value. That's what we think about every day. Every day we talk, every month. How do we create shareholder value? This vehicle, Sygnus Real Estate Finance, has proven to you in 18 months its tremendous capacity to create shareholder value using all the skill set and capability of Sygnus, all of our partnerships that we have established, all of our capacity to look at challenging environment and continue to push along. Remember, what we're talking about right now is that last year, all of last year, we experienced one of the worst pandemic that the globe has ever seen. But yet still, SRF continued to create value for shareholders. This year, we are still in a pandemic. And we have done in the last, over the last couple of months, 6 months, additional value. So this company that you are going to invest in is all about driving shareholder value by using our flexibility, the capability of our team, the flexible financing, the capability of our team, creativity, leveraging partnership to unlock value in real estate so that at the end of the day, when you buy the shares, which are attractively priced, as Jason explained, you will realize tremendous upside. Those are some great takeaways for me, which I want to share with you. This event, obviously, it has been awesome. But it happened because quite a number of persons came together and worked closely with us in partnerships. So let me just, and please join me to thank all of the persons who have made this event such a great event. So let me first start by acknowledging the head table, Jason, Ike, David, my colleagues, Sarah, Mishka from Sagicor Investment and Scotia Investment, our lead brokers, who have really supported us over the year. So let's give the head table a warm round of applause, please. I would also like to thank the LA Creative team. I see them around the back there, along with M1, Blueprint, and all the marketing teams from both the Sagicor side, Scotia Investment side, and Sygnus side to coming together. Naomi Garrick from Garrick Communications, all of these persons who came together to make this possible. Well, thank you. The event planning team, a great thank you. I would also like to thank Terra Nova for hosting us. And, you know, they've been a great partner to us, hosting many events from Sygnus. So thank you very much, Terra Nova. And of course, I'm not lost yet. I want to stop and then thank, of course, the media, of course, and great question from the media. And we are very grateful for that. We are very grateful for, you know, the Observer, the Gleaner, Loop, TVJ, CVM, all the media houses who have come here to get, again, to one of our events to ask questions, indulge with us in sharing our insight and thoughts. Thank you very much, and we are very grateful for the support. And of course, last but not least, of course, I would like to thank all the audience here, my colleagues from Sygnus, our shareholders, our clients, all the persons who have joined us joined us online. Thank you very much. Our directors, we are very grateful for the support. And I just want to say, please go and read the prospectus. You can replay the tape, listen to the story of Sygnus Real Estate Finance. This is a great opportunity for you to get exposure to real estate. Thank you very much and have a great day.